Markets weekly update. I'm Tony Boyajian. Well, the Aussie dollar has strengthened over 4% just over the past fortnight, reaching fresh two-year highs around 79 US cents, underscoring investor appetite for currencies supported by higher interest rates. Now, with robust Aussie jobs data, which we saw last week, and a falling US dollar, market sentiment is now favouring risky assets, creating an optimum environment for the carry trade. Now, RBA Deputy Governor DeBell spoke last week. He made it quite clear that the estimate of the neutral nominal interest rate of 3.5%, which was flagged in the RBA's minutes last week, was not a sign of higher interest rates upcoming in Australia. Whilst global growth levels remain firm, we're also seeing business confidence and jobs growth, of course, quite strong. They're very good indicators, but on the flip side, retail sales, wages growth and underlying inflation are not painting a rosy picture at all. The key watch this week will be tomorrow's GDP data for the second quarter. This is out at 11:30 a.m. Australian Eastern Standard Time. We expect underlying CPI inflation to print around about 0.5% or 1.7% per annum. The question being asked is the stronger Australian economic growth contributing to faster consumer price rises. Now, also RBA Governor Lowe speaks tomorrow afternoon at 1:05, and he'll be talking about labour market conditions, so watch this space for some hints on the direction of future interest rates. The Australian dollar has also been boosted by what's happening in the US market with the Fed's cautious outlook and very poor US inflation data, which is pushing back the market's expectations of further aggressive US interest rate hikes. The chance for September this year is now being dwindled to less than 20%, whilst December is around a 50-50 call. The US dollar index, which is a measure of the value of the US dollar versus a basket of other major currencies, has fallen by more than 2% in the past month alone and is fast approaching that 94, actually sub 94 as we speak, which is approaching two-year lows. Now, the US Fed's monthly meeting takes place this Thursday. They're expected to make no monetary policy changes at this meeting, as it looks like the Federal Reserve's rate hike cycle is probably closer to the end than it is to the beginning. In the meantime, the US dollar remains weak after the failure of US Senate Republicans to agree to repeal or replace their healthcare bill, the Obamacare, and the uncertainty that this has on the government's budget, the tax reforms, the healthcare bill, and a possibility whether the government can avoid a shutdown in September. President Trump-related headlines continue to rule the roost, driving risk aversion in financial markets. The US dollar will remain under pressure this week, especially while these Russian investigations take place. Look, elsewhere, signs of monetary policy normalisation by other central banks like Canada and the ECB, and even in the United Kingdom, is gathering more momentum. Last week, the Bank of Canada raised interest rates for the first time in 7 years. The Reserve Bank of Australia is now a leading contender, given the minimal concerns around about economic growth levels going forward. This may bring forward the market's expectations of a rate hike in Australia next year. So watch this space on developments for the Aussie dollar. As expected, the European Central Bank made no changes to their monetary policy. It looks like whilst inflation remains short of their target, they will announce a cutback to their quantitative easing program for early next year. The euro dollar, however, remains quite well supported on the downside because of robust economic growth in the eurozone. And when we look at the UK version of that news, the sterling pound against the dollar also remains firm above the 1.3 level on encouraging UK economic activity, and the expectation that perhaps by November this year, the UK could raise interest rates by 0.25%. That's it for this week. I'm Tony Boyajian from Compass Global Markets. Don't forget to watch us every Thursday lunchtime at 12:15 p.m. for our latest markets update on Sky Business News on Foxtel and Optus channels. Thank you.